All the content contained in this webcast is for informational purposes only. The investments and strategies contained in this webcast may not be suitable for you. Please consult your own independent financial advisor before making any investment or trading decisions. Good morning, traders and investors around the world, and welcome to Wednesday's 7 a.m. edition of Premarketinfo.com, where we bring you the most news for the most important hour of the day, the first hour. Good morning to you, Dennis. It doesn't look like we've given much back from that nice rally yesterday off the $1,300 support level.
Believe it or not, Joel, it's actually been a pretty quiet after-hours session here. We've only had a tight 6-point range, trading at 13, 18, 25 right now. But we had that nice bounce. We wanted to see that bounce yesterday off the 1,300, and we did get that.
Okay, let's stay focused on yesterday's high, which was 13.20.50. We nipped that in the pre-market at 13.20.75. Made a Globex low at 13.14.50. That's going to be a good parameter there. Really not much below that until the 13.12.50 level. So how would you like to be Jamie Dimon today?
Going to be a little pressure on Jamie Dimon testifying before Congress, speculating that he's going to say this was a one-time event, just poor risk management involved, and obviously he's probably going to say it's not going to happen again, but it's going to be interesting, so you'll want to tune in when that's happening. Obviously, JP Morgan could have a little bit of volatility going into that. No trades on JP Morgan as of yet. We're very early today. We're just doing an early show because I'm actually tied up later in the morning, but it's going to be an interesting day for JP Morgan.
Yeah, that just going to look at it from a technical perspective. That stock made a high back in March at 46.49. Coincidentally, when this trade started to come undone, you see what happened on the chart. We made a low at 30.83. Just keeping an eye on the current activity. Since we made that low at 30.83, Dennis, the high of the move has been 34.44. So let's call that level 34.50. That's going to be major resistance. So that's taken out, Dennis. You never know. This thing could obviously come back and recoup some of this move. It hasn't even recouped maybe 25% of it. I think longer-term traders, if they can overcome this, could look for J.P. Morgan perhaps to trade up into that gap area in the mid-38s.
I'm not going to forgive you, Joel, for talking me out of buying that JP Morgan when it was back down at 31. And now you're telling me it's going to 38. Come on here. This was a trade. I wanted to buy it. I had my finger on the buy button for my investment portfolio. And you're like, well, you don't buy stocks when they're going down. You wait till they start moving up. Well, I wanted to buy that. I would have picked up bottom. I wouldn't have even got sticky fingers that time.
Well, I think I told you to use, if you're going to do it, to use a 28 stock. Maybe to try and buy it at 28.
I think you wanted to buy it at 28. You were looking at these weeklies, and you thought it was going to get down to these couple of lows that we had back in November of last year, down at 28.48. And then I was like, you're probably right. It is probably going down. I'll save myself another couple of bucks. And lo and behold, the thing's up $2.50 from where I wanted to buy it.
How about J&J? Huge move in the pre-market for that stock, up 59 cents. That's like a 20-point move in Apple.
J&J is moving up here. They announced that their purchase, they've already announced this purchase before, the Swiss medical device maker Synthos. That's a $19.7 billion purchase. That's going to actually complete this year, so they're a little ahead of schedule on that. And they actually said before that this could hurt profit for the year. They're actually saying it's going to slightly boost profit for the year now. So that's why J&J is trading up here in the pre-market, 63.67. But keep an eye on this 64 level. We've talked about this level in the past. There's been institutional selling pressure there, and you know when there's institutional selling pressure, the high-frequency traders are always in front of the institutional guys. So I would expect to see a little bit of high-frequency resistance in the 63.90s. Now, this thing starts going up over 64, all bets are off, but I wouldn't surprise me if this thing tops out in the 63.90s, unless, obviously, 64 gets taken out.
A couple things to note here on J&J. Made a high at the beginning of the year of 66.32. Came crashing down to 61.71 on June 1st. And amazing enough, Dennis, that stock got within 12 cents of that area yesterday. Got down to 61.83.
Is that right? Is that
Yeah,
right? Do you see that on a? I'm gonna go look
yeah,
at the yesterday's chart
yeah.
because
Because
that's
it closed week.
wow,
It closed week
wow,
on Monday.
yeah.
Opened up, and then someone got the memo about
I
this.
think so. What a
Yeah, when it was
run!
under 62, and I just noticed that at the end of the day, lo and behold, it closes over $63.
What a
But
run!
if you take a look at this whole move from 66.32 down to 61.71, 64 is smack dab right in the middle. That's a major area. I don't know if we're going to get there today, Dennis. We're up on 8,000 shares. We're up 67 cents. Don't you think that's perhaps a little overdone?
I think so. That's what I was saying to you. I think this will run into trouble in the 64 area. It wouldn't surprise me if it does get up that area, but that's an area where you may want to be trying a short. Just make sure if it starts to take out the 64 and starts moving a bit higher, when you are on fundamental news, funny things can happen. So you want to be somewhat cautious if the 64 does get taken out.
Okay, Mickey D's, man. That stock is just
On the news every
everyone is.
day. I mean, analysts talking
Yeah.
about it every day, Joel. Goldman Sachs downgrading it today, so it is trading down in the pre-market. Obviously, Goldman Sachs being your most influential analyst out there, and obviously, the stock is trading down here on that downgrade. Keep an eye on this 86 level. We've talked about it in the past. Had the double bottom there about a week and a half ago at 86.01. Just took it out there 3 days ago, but then bounced straight up after that. So 85.92. So call that whole area 86. Don't be surprised if it trades slightly through there, but then gets a bounce. The only thing is if it started to trade down like 85.75, 85.60, then I would get nervous because that is making new lows on the move. So if it makes a new low by a few cents, I wouldn't be scared. Starts making a new low by 30 or 40 cents, then I probably wouldn't want to be long the stock.
They have it down quite a bit here on very little volume. We've hit a low of 80. How low have we gotten here? 86.76 in the pre-market. Boy, I don't know, Dennis. I mean, Goldman's pretty influential in this thing. I guess you got to wait, be patient here at the $86 level, see if it can hold. I don't know what they based their downgrade on. Dennis, was it just valuation or because of the
I
week?
don't have it in front of me now. I just
Okay.
watched the headline fly by. But
I'm just curious. But
yeah,
after this 86 level, lo and behold, I don't see real good. I mean, it's not going to happen today, obviously, but this stock could be heading down 80 under $84, perhaps 83.70 level.
yeah, I don't know if obviously it's got an ugly trend here. We've been moving down here, and if it takes out that 86 low with some conviction, then I'd start to get nervous. I don't know if I see it doing that today. I think it'll test it today. Not sure if it's got enough momentum to take it out, but eventually, the trend still, overall trend here is still pretty ugly. So you want to keep that in mind when you are trading out Mickey D's. If it does start to take out that 86 with some conviction, start trading 85.50, I'd get a little nervous on those longs.
Okay, Scott's Miracle Grow. The stock price really isn't growing.
No, the stock price isn't growing. Hasn't had any trades here this morning. We're very early today, but it's trading down significantly last night. Joel will get you those after hours lows last night there on SMG. It was their full year guidance. Wasn't good coming out there after the bell last night. Is offered down at 37.5, and nobody's even taking that offer. It's been offered there for quite some time here in the pre-market now. So chart is ugly. We've got to go to the weeklies to try to find support. That's not far enough. We've got to go to the monthlies to try to find support. $40 obviously trading well below that. If you go back to 2010, Joel, 37.5 right where it's offered. There was a low in 2010, but I'm not even sure if that's going to hold. What do you think on this one?
What did people like stop fertilizing their lawns or
I
something?
got a bunch of cedar trees that need fertilizing in my backyard, so maybe I'll go out and buy some Scott's Miracle Grow. Maybe that's an insider tip there. They're going to get some because I got about 50 cedars in my backyard there, so maybe they're going to sell some of that stuff if I
I
get on
don't
there.
know. Holy mackerel. We did hit 35 in the pre-market.
Wow.
Yeah, getting a
After
little,
hours, yeah.
yeah. Now here's an after hours chart where you have hit you do have a tradable bottom here. It hit that level. It's kind of been on a steady climb up. Running into problems here with 37, so I would use that 37 as a swing number. I imagine if we get anywhere back near that 35 level, you should find pretty good support. Above 35 or above 37, this thing could run. And just a note going back to the dailies on this status. just kind of thing to keep back in your mind. I mean, obviously this company came out with some bad news in May when we capped out from 53.13 low to a 40
Yeah.
49.39 high. When companies come out with bad news and they start telling you bad news, you don't need to rush out. I mean, if you're going to do it for a short trade or
Yeah.
a day trade, okay, it's fine. But when companies come out with bad news, they usually come out with more bad
They
news.
really do. Wait till the stock starts to say some good stuff, and that's exactly it, Joe. You had this huge gap down day in May. People will come out investment portfolio picking bottoms. It often does get a tradable bounce, but that's all it is, as you were saying, is a tradable bounce. You've had follow through going through here. It keeps drifting down, drifting down. Now you got more bad news, which is going to gap the stock down probably another $6 or $7 here today. So if you were picking bottoms back in early May at 47, you're under some pretty you're underwater here now on this trade.
Okay, not all news is bad news, Dennis. Philip Morris is up to their old tricks.
Philip Morris, they announced an $18 billion share repurchase plan here over the next 3 years. So it has had no trades here this morning, but it is bid up 85.51. Like we said, we're very early here this morning, but it is bid up in the pre-market. I would expect that the stock is going to be higher on that repurchase news. No shares traded, but keep an eye. There's some levels here you want to keep an eye on. We were trading 85.90. We had a high back on May 25th. I think it wouldn't surprise me if it took that out and started trading higher, and then it starts to open up a little bit there.
86 looks like the level. You're correct, Dennis. But when they do it a buyback for all those shares, don't they send a market order to the floor on the open the next day?
Yeah, no, they obviously take their time, so it isn't like there's going to be all this buying pressure from the company pressing the stock higher. It's slowly those orders are slowly put into the market over the course of 3 years, they're saying. So I think it's just the prospects that if the company's buying it back, that means usually a bullish thing, for the stock. So I think that's you get immediate impact as people are coming in saying, oh, if the company's buying it, they're buying their stock back, then I want to own it too.
Okay, yeah, 86 is going to be a level. I'm sure there's going to be some size in the book there. If in fact it could clear 86, we have a high at 86.47 on May 11th. And just a general note over the last couple months when we were trading near the highs and all the earnings were announced and the dividend increased, a lot of companies did announce buybacks, and we did have a sell-off in the market. So there has been support. Besides the Johnny come lately investors, if companies have been competing and bidding for their own stock down here, and that's put a temporary low in the market.
Yeah, it helps when companies are buying back their stock for sure. And speaking of stocks that these aren't in the news here, but I want to focus on a few of these dividend plays because you have a number of high-profile stocks going ex-dividend today. Coca-Cola going ex-dividend for 51 cents. So adjust your close down on Coke because it's the actual close is 74.69, not 75.20. So the adjusted close 74.69. But a lot of times what you'll see, and here's two other ones that I'll just highlight briefly. MO, which is Altria, that's going ex-dividend as well, and Merck went ex-dividend as well this morning. So the adjusted close on Merck is 38.43, not 38.85, and on Mo your adjusted close is not 33.43, it's 33.02. So you want to keep that in mind if you are trading these stocks. But what I want to highlight, look at this Mo chart there, Joel. The stocks will often have a nice run up going into that ex-dividend as people are anticipating that there's going to be buyers that want to capture the dividend. And that's exactly what Mo has done here. Merck did a similar thing on the chart, just running up before that dividend, nice run up into that ex-dividend. And what often happens, that's just a run up for the ex-dividend. After the stock goes ex-dividend, you'll often see the stock pull back and sometimes give back part of those gains.
Dennis, explain capture. I mean, people obviously hold stocks long term for dividends, but I think what you and I are focusing on here is that people are just to focus on a stock the 2 or 3 weeks before it goes ex dividend and the 2 or 3 weeks after. So what they're doing, it's kind of like a short term CD or a short term interest rate investment. They're also trying to capture some principal on it, correct?
Yeah, and I wouldn't even say it's 2 or 3 weeks. I'd say 2 or 3 days, usually maybe a week in advance. You will often often see the stock run up before it goes ex-dividend. These dates, you can get them off different websites. The dates are publicized. And when they go ex-dividend, just for you people who don't understand, when they go ex-dividend, that's basically on the ex-dividend date, the company writes down the shareholders, and whoever is holding the stock on the stock after it goes ex-dividend is not entitled to the dividend. So the people that were holding the stock yesterday at the end of the day get the dividend, and the people that are holding the stock today do not get the dividend. So what you see is people want to hold the stock yesterday, and then today the stock will move down and the adjusted close price and off, and the stock will have some follow-through selling pressure as those people who just captured the dividend then sell the stock because they were just in it for the dividend.
And also, there's people that if they got it on the cheap on the run up, they don't care if they don't actually sell it at the closing price because they've already they've already had made money on their principal.
Right.
So if they don't get out at the mark, they're still making money. But it's a strategy out there that people employ with millions of dollars. We're not just making this up, folks.
No, and it is, and you've got to be cognizant of it because if you're trading a stock that's going to go ex-dividend in the next couple of days, there is often upward pressure on that. So these high-profile stocks, especially like the Cokes, the AT&Ts, these pay pretty hefty dividends. So you want to be aware when Coke's paying a 51-cent dividend, you want to be aware that it is going ex-dividend and that it could have that run up. And Merck the same thing. And just look at the chart on Mo. I mean, the picture's worth 1,000 words here. It's exactly what happened. The stock's been running up for 5 days straight ahead of the ex-dividend date. It's going to obviously open down to about 33.02 here because it is ex-dividend. That's the adjusted close, and often you will see that selling pressure come in, and it wouldn't surprise me, if the stock does open or does close down on the day today, just because you get those dividend players who are now dumping the stock.
What's wrong with your Apple stock? Got under 570 yesterday.
Apple is interesting yesterday. I actually made I trade obviously, but I was making a trade on this one. I actually had a pretty good one, Joel, so I'll highlight my good one there. I had this feeling, how I'm always talking about my 2-day moves. I always like when I see a stock that moves down, I often think it gets a follow through. So I was looking at the chart yesterday here on Apple. It came down from the 588 area all the way down to 571, I think it closed. This is 2 days ago. And then yesterday morning, it was just consolidating a lot. And often what you'll see is a down move and then some consolidation and then a follow-through move. So I was thinking along that if this thing keeps consolidating here, maybe eventually starts to break down. It wasn't bouncing back right away. So I ended up getting a short on at 574.35. And I always have an out. And this is one thing for you traders out there. You always want to have an out. So enter a trade knowing if it goes wrong where you're going to get out. So I put a mental stop. I don't like putting physical stops, but I knew if it traded above 575, I was going to get out. So I was giving myself 65 cents. You get some slippage in there. I was basically giving myself a point. And I figure, maybe this thing could get down 570. I held it for about 25 minutes, started drifting down, and then eventually did take out 570. I got a little bit greedier. I actually got out at 568, so I actually made 6 points on it, which was a nice little trade for me. I thought it might go to 565, and I was kind of, I was saying to you, I was upset afterwards when it started trading down to the 567 handle. I was like, oh, it is going to go to that 565 number that I thought it was going to, but it didn't, so I'm glad I covered. I got it just, 568, just slightly off the bottom, and then it ran straight up after that. I did try the trade again. Once you do it once and you try it again, but I got stopped out the second time and lost 60 cents. So overall, I think I still made 5.5 points. So it wasn't a bad day for me on Apple.
And also, just we were talking about that trade while you were in it, and one thing you can rely on the market some of the time, but not all the time, is where your stock is acting relative to the market. The spoos were popping a few times in the morning. Apple wasn't going anywhere.
Yep.
And then finally, when the spoos cracked under that 1300, as brief as it was, that's when Apple cracked, went under that 570 level. I was talking to you. I remember you were looking for 565. I said maybe try 566, and then you just kind of caught it back on the way back up. So using the market's good, looking to the relative price activity of your stock. Dennis, anything else you want to add to our listeners here that are up at the crack of dawn?
No, we're pretty tight here, down 3 points. Fair value is down a couple points. We're almost exactly flat. Jamie Dimon testifying around 10 a.m. in the morning, so you want to keep an eye on that. But other than that, that's all I've got for you there, Joel.
Yeah, just one closing thought here. It's a boring stock. No one ever talks about it. General Electric here at 1950. This is
Ooh,
going to be the sixth time it tried to take
ooh.
out this level. Lo and behold, if it gets above there, it's probably going to go to 1951. No, I'm
Or you
just,
sell it there. I'm always a
yeah,
fan of try to sell it there, and if it takes and starts going 1955, I cover.
yeah.
But you have some defined risk there, so I don't mind that trade.
Okay, folks, have a good day. We'll be back with you tomorrow.